What exactly is an investment portfolio and why is it important? Well, here's the thing, guys. It's actually one of the most important things to happen in investing in the last 100 years. It's that important. The truth is that every single investor knows what a portfolio is, they know why it's important, and they have one. And on the flip side, the amateur, they don't know what a portfolio is, they don't know why we have them, and they don't even know that they have one. Now, the portfolio is critical to your success in an investing and also managing money. So it's really important. By the end of this 10-minute video, you will know what a portfolio is and why it's important. So, how did the portfolio get started? What is an investment portfolio? An investment portfolio is a basket of assets that can hold stocks, bonds, cash, and other financial securities. How the modern portfolio was created. Well, let me take you back before 1951. Here is an average guy, and he thinks he's doing all right because he's invested in some stock. The problem is this is just one security. So if the stock market goes down, then his entire portfolio also goes down. What about this guy? He seems a bit more savvy, right? And he thinks he's done well because he's invested in multiple stocks. But the problem is these are correlated assets, which mean they all move together. So if the stock market goes down, also his entire portfolio will go down. And then came along this guy, Harry Markowitz. Harry Markowitz is an American economist, and in 1952 he pioneered modern portfolio theory, which later he was awarded a Nobel Prize. And in fact, he's still alive today. At the time of this recording, he is 92 years old. Investing in a single security did not make sense. To reduce risk, it is necessary to avoid a portfolio where securities are all highly correlated with each other. Basically, what he was saying is we need to avoid correlated assets. How do we do this? Well, take this portfolio. We have now got half the portfolio in stocks and half the portfolio in gold. So this time, if the stock market were to crash, people will run to safe haven assets and gold price could go up. Now this is uncorrelated. Since there were two criteria, risk and return, it was natural to assume that investors selected from a set of optimal risk-return combinations. So we also need to understand risk and return. Take the portfolio again, half of it in stocks, half of it in gold. Now, as only half of it can crash with stocks, this reduces your risk. And on the flip side, this means it can increase your return. Thank you, Harry Markowitz. You certainly did earn your Nobel Prize. So how do we build a diversified portfolio for ourselves? Well, this is the topic of the next video. So there you have it, guys. That is exactly what a portfolio is and why it's important. And like I mentioned at the beginning of the video, it's one of the most important things to happen in the last 100 years. It really is the foundation of all investing. So the key points to remember is that it was created in 1952 by Harry Markowitz. And it's all about uncorrelation and making sure your portfolio is diversified. And that way you can increase your returns and lower your risk. And that is what it's all about. As always, guys, if you like something in this video, then click that like button now. It would really help out the channel. If you'd like to subscribe and learn more about money and investing, then be sure to click the subscribe button. And if you've got any questions or comments, post them below now. In the next video, we're going to learn how to build a portfolio for ourselves. So, see you in the next video.